Most investors in this crypto bull run are getting destroyed. And if you're not careful, you're probably going to be next. In this video, we're going to go through 5 big things that people are completely failing on. And hopefully you can avoid it. Now, in terms of the previous cycle, if I played it the exact same way for this cycle, I think I'd be destroyed. And I'm very, very fortunate to have picked up on it. The problem is not many people are listening. And I think we're going to see a big problem later down the line. Now, before we go on, like the video, please. It will make a massive difference to the algorithm. And I want to know what percentage of Bitcoin you have got. Now, the first point of this entire video is people, many of you, have overlooked Bitcoin completely. Overlooked it, not even giving it a thought because you want to get that quick, rich dopamine, which makes sense, right? But realistically, I think most people have failed to build a solid foundation position of Bitcoin without then focusing on, said, altcoins, meme coins, whatever it may be. That's where the big problem lies. Now, one huge factor here, and as I've just alluded to it, the wealth. Building a solid foundation. Now, obviously, this is just dollar cost average in terms of simulation. But even if you put $50 in per week 5 years ago with the set of Bitcoin, you get the idea in terms of how much you could return. Dollar cost averaging in terms of a solid asset works very well. And every single one of these, you would have made some money, luckily, right? Obviously, if you go even 3 years prior, you're still up. It's all a time thing. I don't know. But building a solid position in Bitcoin is absolutely key. And we're going to come on to why it's massive at the end of this video. And you'll see why it's a very, 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 very big, obvious point. But I think people have missed it completely. And even though I've talked about it and many others have talked about it, we need to talk about the obvious in the room here. Why is Bitcoin performing so well? We'll talk about it. But obviously, yes, you can change these numbers here on this website here. And you can kind of see how like $250 per week, which I know for some people is quite a lot of money, but over the course of time, over a 3-year period, you are going to make a hell of a lot of money versus the entire market. Build a solid position in Bitcoin and then leverage other things to then maybe make more Bitcoin if you can afford the risk. Now, I've also said it here. 90% of folk have been sold the dream of altcoins and always hold Bitcoin. It's a liquidity driver. It's all psychological. People want to get rich quick. I understand it. And people have got rich quick by time, holding on in the bear markets, the bull markets. But that does not mean altcoins. Some altcoins have majorly underperformed. Meme coins starting to see the same difference in terms of opinion. Are they ruining the market or not? Let me know what you think. And the obvious in the room with Bitcoin is its returns. And usually, 9 times out of 10, it grows and it goes up in value over time. Yes, there's bear markets. Yes, there's bull markets, obviously. But what would you rather have? Something that goes up over time, like the S&P 500, the NASDAQ, or would you buy an altcoin that is boom and bust with VCs shilling it and ultimately key opinion leaders killing you with it? That's kind of where the problem lies. Is utility even a thing now? Now, the second point of this video is people have majorly overbought into altcoins at the wrong time, basically, right? FOMO gets everyone in. People pile in at the tops, but not when there's a real opportunity. And this is becoming obvious when it comes to meme coins now. Short-term hype does not equal long-term wealth. There's a couple that are out there, but they're community-led tokens. Look at how long it took for Doge to kind of get that appreciation. It took a long, long time, right? So stuff like that is huge. And in the past cycles, we didn't have meme coins that much. We had a couple, but not as crazy. What I'm getting at is the fact that some key people in the market, such as CZ, could talk about his dog, and then 500 people create a token for it. That becomes a problem. It becomes overbought. Liquidity gets drained. And then there is a very, very big problem with liquidity going elsewhere. Now, I've often said this. You're probably better off trading meme coins without investing in them and follow the hype and try not to get destroyed by over leveraging, just playing the game, because it's where the quick money is. What are centralized exchanges doing all the time? Answer in the comments if you want to. I will wait. They are listing things on centralized exchanges because of the hype, because they know that you are a little bit naughty and you like to go a bit trigger happy and go, I want to buy that. I've now lost my money. So you got to look at that as a factor. Now, if you are genuinely interested in trading, and you can trade meme coins on here, it's very, very easy. You don't have to use leverage. You can just do whatever. But this is a really good exchange. It's called Bluefin. It's UK friendly, funny enough, which is quite rare. But yeah, 9 times out of 10, as I say, most of these exchanges list a meme coin. Why? Because they know that you're going to be greedy and buy it. Why not go against the grain a little bit and short it? Just example. Get my point? Because the reason why I say this, look at this on the screen. It's quite clear where all the meme coins are going. They are literally going to zero. Every single time they get listed somewhere, market makers absolutely destroy it, and it's just an easy short. It literally is. And I was short on a couple of these not too long ago, like Whiff and stuff like that, and even Chill Guy. Where have they gone now? Well, they've literally died. So maybe put that into your kind of skill armory if you want to. Just have a little look. Look at meme coins performance. It's mad, isn't it? One final thing before we go on to point 3. Pump fund launches. Solana has not grown since, which is a bit of an issue. But at the end of the day, it's convenient. It's probably a skill problem. And there's probably a liquidity problem too. Where's it going? Well, it's not going back into the crypto market, is it? Let's be honest. Now, this is a controversial statement. Let me know if you agree or disagree. But most altcoins don't have actual utility or need a token. Let's be honest. They're only designed to get the team wealthy, marketing money. And that is a problem. Most altcoins do not have actual hype. They don't have it. They don't have demand for them tokens. And that's quite apparent because they are falling and falling and falling against Bitcoin. Just because a coin pumps doesn't mean it has value. Please remember that. And that is true. But also the trap of narratives. It's huge. I've fallen for it massively. It happens. And I'll talk about it. Versus, say, real adoption. Polkadot, great example. The narrative was interoperability, cross-chain, all that kind of stuff, right? The blockchain of everything. Has it been, though? No. Is it being adopted? No. Even with proof of adoption, i.e. sponsorships on, say, Inter Miami's shirt and the app, people using it? No. That's where we're at. We're at that point in the market where no one cares. And that's the problem. How are we going to grow? The only thing people care about at the minute is Bitcoin. That's the only thing that people care about. Until that changes, until that shift happens, until we see real utility in a couple of assets. Now, you could probably argue maybe 10 to 20 assets in the top 500 have utility outside of the world of our bubble, right? People are not going to want to learn how to use, say, Polkadot because it's quite hard. But they will probably like the idea of, say, XRP or Hedra Hashgraph or Solana because it's quite easy to use. That's the difference. How many other tokens don't need a token? Well, you could probably argue quite a lot, probably over millions. And that's where we're getting a bit of a problem. And to showcase the hype right now, look at this tweet from Miles. The top performing layer 1s in the past 24 hours are new blockchain ecosystems. Basically, people are just looking for shiny objects to play with, like Story, Bearer Chain, Bittensaw, obviously been around for a bit, but, you know, people are looking at certain things, and this is also on, say, well, you'll see it, I'll show you. On the left-hand side of the screen here, you've got the new networks. Unichain, Story, Abstract, all these, right? People are now playing with these assets and they're starting to put money through them. Why not use the existing ones? Well, because there's probably more opportunity here in the short term because there's probably lack of liquidity to be able to pump things, basically. And there's probably no snipers. Again, remember, snipes kill things. It's a problem. So that just shows you that, like, people are just going from one to one. They're not caring about the adoption of it. They just want to make money. And yeah, it's a greedy market. It's a peer-to-peer, player v player sort of vibe. But ultimately, people are getting it completely wrong with investing. You're investing in assets that people probably don't care about. I want to say it. This market is different to last cycle. It's longer. The bear market for the altcoins is massive versus the previous cycle. The data shows that, and I'll show you in a second. But if you repeat old strategies, you may lose big. Now, I've said it before. I would have lost money if I did this in the last cycle. If I played the last cycle like this cycle, I'd be destroyed. And we'll talk about certain things in a minute. But the macro factors and the market conditions have changed things massively. Also, you got to remember how people's behavior has changed. People are literally trying to, like, get profit straight away, not holding on. They're not actually doing the actual thing that they used to do. So it feels like everything's really, really, really different. And that's a bit of a problem. So when we talk about this, what I used to do, right, and this is quite obvious, I used to buy coins that came out in the bear market that didn't get any sunlight but were developing really, really hard. And then once the bull market came, it would just do well, right? And the first sign of this going wrong was the FTX crash, where you bought solid assets in the FTX crash when everyone was getting destroyed. But Bitcoin bounced, But altcoins didn't. Most of them didn't. That becomes a bit of a problem, right? You'd think on a big, massive black swan event like that, something would happen. It didn't. Even though Bitcoins went from $15,000 to over $108,000 in that time period, some of your altcoins are down 80-90% in that Bitcoin pair, which we will come on to in a second. The big problem we have, old stuff doesn't work. People are not bothering anymore. That's a bit of a difference. And I'll show you on the screen. This is Ethereum's past performance in the last cycle low. The black line, it's not doing anything. It is a hell of a lot longer. We're talking almost a year late. Oopsie. That's a bit of a problem. And we can't really put our fingers on why that is a situation. Meme coins? Solana? POS? From POW? What is it? Let me know in the comments what you think. But it's just a bit mad, isn't it, when you think about it? So the one thing that I preach on my own company about learning how to basically navigate the market is we probably should be considering trading altcoins more than investing in them, because there's more opportunities when it goes down versus when it goes up currently, which I know sounds absolutely baffling when you're going against the market. And it's quite hard psychologically because you are kind of like long-term bullish. You're bullish on the ecosystem of blockchain technology, cryptocurrencies, Bitcoin, and you're thinking, there's no hype there, I should probably short it. I reckon 7 out of 10 of those moves over the course of the last 12 to 18 months, you probably would have made some really big, wins. We have a trading indicator that helps with momentum. You should probably check it out. Free trial, by the way. Other things that are a little bit different that people don't like: CPI, FOMC, the Russell 2000, all these charts, all this information, this data makes crypto react. It makes Bitcoin volatile. It makes it react because of the institutional investment with the ETFs. Big money's flowed into it. So whenever Bitcoin sneezes, altcoins die. It's a bit of a problem, right? So stuff like that, this time is different. 4 or 5 years ago, I wasn't talking about CPI. I wasn't talking about, inflation metrics. I wasn't talking about interest rates. I wasn't talking about, non-farm payroll. I wasn't. Things change. And the final thing, Bitcoin dominance and why the Bitcoin pairs are still ignored. It really is a thing. This is like, oh my God. So most people who are investing in the market don't actually check the BTC pairs of what they're buying into. Even though I've mentioned before with like the FTX crash, that was a really good time to buy, but ultimately dominance was quite low at the time. USD prices were expected to bounce, didn't happen. But the dominance really matters as a key signal. And we're not just talking about Bitcoin dominance, we're talking about individual asset dominance, talking about total 3/BTC, which I will show you in the chart. But the problem is, how much rotation are we going to get from Bitcoin or other assets, other liquidity, going into altcoins? That's where I've got a bit of a complex going on. Yeah, I'm attached to my Bitcoin. I think most people are too. Why? Because we've already made money. Why would we want to put money into altcoins, which we know are actually fading as an oscillator against Bitcoin, which is a bit of an issue. So it's a huge psychological trap that we're in. But ignoring those pairs and just being blind and thinking USD only, you've probably cost yourself so much money. And I've done multiple videos in it showcasing how, and I'll show you in this video as well, how literally 95% of assets have been absolutely destroyed by Bitcoin. Even though you might have made money in USD, actually would have been better off you just buying Bitcoin. This is the Ethereum chart. This is the BTC version of said chart. Now, if you remember, I was saying, we're not going to go anywhere over 60% dominance because Ethereum is not going to lose 70-80% of its value. Well, that turned out to be utter bollocks because it has, and that's where a big problem lies with the whole market. Is Ethereum the key to it all? Maybe. But the one thing that people forget is the price metric of all of this, which is 2,819 sats, equals the price of Ethereum right now. Go and check it on Google, you'll see. Now, that is just showcasing a honking, ugly downtrend, right? If you bought Ethereum, basically, we're talking 2020, and you watched it and round-tripped it all the way back down, you've only made a little bit of BTC on your asset. And that goes for nearly every single asset in, basically, let's be honest here, the top whatever. Most things are like down big, apart from maybe BNB if you held from 2021. Polkadot is a great example. Look at that. You know, even Solana, it's lost its level here. That's why we're at problem levels, right? Where people are literally losing money hand over fist because of this metric. But the big key is obviously the BTC dominance. What does it do at these high levels? Do we rotate? Do we fly down? Now I'm going to say it, and I've said it many times. I think there's not enough liquidity and there's too many altcoins. And I know people will be like, well, in the 125, that's where most of it is. Yeah, it is. But people are getting destroyed in meme coins on Solana and all these new chains all the time, constantly rinse, repeat, rinse, repeat. VCs dumping on you. Key opinion leaders getting key allocations and just dumping on you. Literally, that happens. I get so many emails. Oh, can you promote my token? And I look at their account, it's like, it's got 23 followers. It's absolutely dog shit. And they're like offering me $10,000. I'm like, no. No. Honestly, it happens. It's all over the place, right? So I said it before. Are you attached to your Bitcoin? Well, probably are. If you've been in the market for such a long time, you might well not want to rotate. And that might be a lot of people. So what could happen this cycle is, well, what about if dominance doesn't go down as far as we think? What about if it only goes down to 50% and we get a little alt season and Bitcoin just runs higher? And basically, a lot of altcoins just get bled out over the course of time. And again, showcasing this on the total 3/BTC, this is where we are. Higher this goes, the better the market is. And again, the same situation as every single cycle, diminishing returns against BTC. First cycle kind of situation up here. The second cycle, where do we go here? Do we just go up here somewhere and just kind of flop about and float and die? That's big problems. And when we talk about the context of this entire thing, it all stems back to rule number one and point number one of this video. You should have probably held and had a strong position in Bitcoin. Otherwise, you're probably going to be bleeding out a lot of money. Now, I want to answer a question that you probably got. Is it too late to rotate into Bitcoin? Yes, pretty much. You've missed your chance. It's do or die. And the altcoins that you've got or the meme coins that you're hoping is going to do well, it's going to rely on so many factors, but they could well be a little altcoin season in the bull market. But where's the liquidity going to go into? It's not as easy as like the previous cycles where a high tide will raise all ships, and it does in the past, but now, no. So yeah, if you're considering starting out in this industry, sorry, I've broken your bubble a little bit, you need to have a solid position in Bitcoin. I would highly recommend, instead of altcoin investing, probably look at separating it and trading it. You can do that on spot. You don't have to do it as leverage, by the way. You can just buy the trends, buy the hype, and just kind of get in and out and not be kind of bag holding for the rest of your life, which does happen quite a lot. And I know there's tax elements to that, but ultimately, what would you rather do? Lose all your money or pay a bit of tax on profit? I know what I'd rather do. Anyways, if you like this video, please do leave a like, subscribe as always, and watch this video that I'm kind of flickering around here because I think that one's going to be pretty key.